Some saying the sustained momentum we're seeing here signaling an end to the pullback, hitting a 2010 high in early August. Is this the beginning of a sustainable uptick in your books?
Yes, it's the beginning of a sustainable uptick, and I think what's driving the market upturn is essentially foreign interest. We've been seeing a lot of foreign interest on some of the big names like East African Breweries, which you mentioned was the largest trader, making up about 70% of trades yesterday. And additionally, what we are seeing is some of the foreign funds that actually have an interest in Africa, Nigeria, Kenya, and South Africa, are redeploying their funds more into Kenya and South Africa. There's been a bit of a sell-off in the Nigerian market, and some of these funds are actually now beginning to trickle further down into sub-Saharan Africa, and I think Kenya is going to be an interesting market. And even beyond looking at the top names like East African Breweries, we're beginning to see a bit of demand on KCB based on its favorable valuations. We have it trading at about 1.3 times 2011 price to book, and this is compared to about 2.5 times on the average of the Kenyan listed banks, about 56% discount. So we're beginning to see a bit of uptake on KCB, and we saw it sort of settle at 19 shillings, and on a demand supply basis it's been doing between 18.6 and 19, with supply sort of coming off at that level.
Of course, we know that the market is eagerly anticipating third quarter earnings season when it comes to the banks in particular, and that to a large extent driving the financials higher for now. In the meantime, Standard Chartered, we know that rights issue is looking to be fully subscribed. Performance on that counter as you see it playing out at the moment?
I think there's been a gradual increase on the rights that are trading on the market, though the supply of that is very limited. We suspect that most of the shareholders will actually take up their rights and probably come and trade on the market going forward. But again, as you said on the banks, I mean, we expect upbeat performance on the banks. We're estimating about 42% year-on-year growth on the universe of listed Kenyan banks. And also on the banks, we have housing finance that's actually raising medium-term note of about 5 billion Kenya shillings, and also seeing a bit of interest on that. The counter has also been gradually coming up. I think it's trading at about 25 shillings, 24.50 range. And the fact that they're raising an additional bond to support their entry into the Kenyan housing sector should actually benefit for them in terms of the bottom line going forward.
Well, we've been looking at many of the fortunate players on the in the industrial sector. The not so fortunate Kenya Power Lighting Company. Now, this is a share price that has doubled in value over a 12-month period and has rallied roughly 13% in September alone, ahead of its full year results. But it's being plagued by a possible strike action starting off on Monday. What's your view on KPLC at the moment?
I think KPLC is still a strong company on the industrials, and by strong I look at it vis-a-vis Kenyan. On the energy sector, we've been seeing a lot of private investment in terms of production of electricity, and on the one end we only have KPLC as the sole distributor of this electricity that's coming on board. So if you're looking at an entry into the utilities, then you're better off playing the KPLC space. But then again, there's the risk of the strike by most of its employees. But I'm looking at it on a general term. What's the worst thing that could happen is if a transformer blows at a certain location, then maybe you don't have electricity for a while. But if you actually paid up your bills, then you're able to continue having the electricity and paying for the electricity. I think it's going to come down to a position of negotiation power between KPLC and the representatives of the employees. And so far, they've already indicated about 15% increase on their housing allowance. So I don't think it's something to worry about. I think systems will continue as is. And I think the supply of electricity is more dependent on the equipment and the people who run the equipment, as opposed to the casual workers who are actually threatening to leave the company.
And you expect resolution when it comes to the actual, problems and issues being put on the table, being resolved sooner rather than later?
Hopefully sooner rather than later. I mean, I can't speak because I'm not on the management side, but hopefully we'd expect that they do it sooner as opposed to later.
Well, looking at another share price that's been under pressure, KenolKobil, it's fallen 11% in the last 3 months to average 9 shillings. It's pulling down its market value by 1.6 billion shillings. Of course, this is a company that's also being plagued by the revocation of its trading license by the Energy Regulatory Commission. What's your position on KenolKobil?
I think the position to take on this depends on your risk appetite as an investor. If you're quite risk averse, then probably you may be looking to exit from the counter. But if you're not risk averse, the situation that KenolKobil is sort of twofold. They have a 19% in terms of the market share here. So the worst case scenario is maybe they have to fold up their Kenyan operation and probably sell it to either an existing market operator or somebody who's looking into getting into the Kenyan space. Given 19% of the market, that will probably be a good takeover for an existing company or a new company. So it sort of leaves you in terms of a win-win position for somebody who probably may be willing to pay a very minimum premium, or the discount factor on KenolKobil would not be as adverse as if it had a lower market share. On the other side is probably it wins the court case against the Electricity Regulatory Commission and continues in its business, meaning if you're a current shareholder, you're definitely going to be sitting on the upside as going forward both ways, though the upside is limited to the extent of the next decision that's actually taken on the company, either by the regulator or by somebody else who's looking to get into it.
Of course, on the positive side, in the past 4 years, KenolKobil has chased an aggressive regional expansion plan that has seen it establish a footprint in Zambia, Rwanda, Uganda, Tanzania, Mozambique and Ethiopia, as well as, of course, it seeks out these new revenue sources.